am pleased to be here at the New York Fed, continuing a long-running tradition of the interview that we do. John Williams, the New York Fed president, sits down with CNBC after the December meeting. And it isn't often, but sometimes I guess this happens, that the inflation number comes out right when we're sitting down. So, John, it came in a tenth lower than expectations. Your reaction to it?
Well, first of all, Steve, welcome back to the New York Fed.
Great to be here.
We're celebrating our centennial here at our headquarters, 33 Liberty Street. Beautiful building here. So, in terms of the data, I think what we're seeing is, encouraging news. It's been a bit of a bumpy kind of journey of seeing the disinflation process, especially over the past 12 months. But we've seen really sizable movement down in inflation in the last couple of years. We're still not to our 2% goal. We're going to make sure we get there, but definitely seeing further progress towards that goal.
Yeah, I should probably say that I misspoke when I was telling you the number. I said, what's the target for the committee at the end of the year? And you said 2%. I meant what the actual forecast was. So, but you're coming in more or less on relative to what the forecast was. It's pretty close, right?
Yeah, so I think that the recent data are consistent with what we've been seeing and, what we saw in the economic projections that were just published this week. So, yeah, again, this inflation process is continuing, and a little bit of good news on inflation this last month.
John, set us up for 2025 with your outlook for growth and unemployment and inflation.
So the economy is in a very good place. We had really solid growth. It looks like the GDP growth this year is about 2.5%. Unemployment rate around 4.2%. And we talked about inflation coming down closer to, but not there yet at 2%. So for next year, I expect growth to slow somewhat to around 2% GDP growth. Expect the unemployment rate to kind of stay about where it is, around 4.25%. And, I think the disinflationary process hopefully will continue. There is a lot of uncertainty now for a number of reasons, including the uncertainty around some of the policies that may happen next year. But right now, I think we're in a really good place. I think the economy is a good place. And most importantly for me, monetary policy is well positioned. I think we've got monetary policy in a somewhat restrictive stance to make sure we get inflation all the way to 2%. That's our goal, but also in a way that balances the risks to our goals of maximum employment and price stability. So that's how I see it. But of course, there's a lot of uncertainty. We're going to have to be data dependent as we adjust policy going forward. John,
there's a bit of head scratching going on among people who watch the Fed closely on Wall Street. You raised your inflation forecast, the committee did, but also cut interest rates. How do you square that?
Well, again, we have seen very good progress in terms of inflation already. The inflation data overall since our September projection has been a touch higher than we saw. The economy has been a touch stronger than we expected, especially the GDP growth this year has been very good. So I think it's really a matter of, the data have been good. We're trying to focus on maximum employment and price stability goals, keep the balance of those risks well balanced, and then, get monetary policy in a good position. This is the recalibration of policy from very tight policy or restrictive policy towards a less restrictive policy, given where we are in the progress we've made on inflation. So it's really about getting policy well positioned for whatever may come next.
Did you raise your inflation forecast for next year?
Well, my view is that there is a lot of uncertainty around inflation. I think that some of the inflation data relative to September has been a little higher. So there's some reason to raise your inflation forecast. I think some of the risks to inflation are also, higher because we just don't know what's going to happen next year. That said, I do feel that, we're on the right trajectory. There's just a lot of uncertainty about what's going to happen next year.
One of the questions that the chairman fielded at the press conference was the extent to which members of the committee folded in their outlook for fiscal policy changes next year. Where do you stand on that?
Well, first of all, I completely agree with the chair's remarks. There's just a lot of uncertainty. Sure. We don't know. A lot of analysis is going on, a lot of studying scenarios and possible policy actions that may or may not take place. So I would start with, we don't know. we're going to have to learn what policy actions Congress or the administration will choose to do, and then obviously study those, analyze those, and fold those in. Right now, I think some things, look, we already seen some slowing already in immigration into the U.S. and labor force growth. I expect that to continue, and we'll see about other things such as fiscal policy or trade policy. Right now, I feel like we just don't know the answer. I think directionally, you might expect there to be some forms of tariffs or something,
right.
But it really matters exactly what happens and what those policy actions are, and then we can really take that into account.
But have you begun the process of folding in some of that expectation into your forecast?
So in my own personal forecast, I have incorporated some thinking about where fiscal policy may be, immigration and other policies, because those are important drivers to thinking about the economic outlook. But I would just emphasize that just a lot of uncertainty about what those effects will be.